Hello traders, today I'm gonna go over our new trend and pullback toolkit. This toolkit is designed for serious traders who want a comprehensive trend approach. It empowers traders to align their strategies with the prevailing market trends, thereby mitigating risk while maximizing profit potential. The toolkit has been designed to be user-friendly and easy to understand, with a focus on displaying only the most crucial market insights. We have avoided flashy colors and unnecessary features to keep the interface clean. This approach ensures that the toolkit is a practical tool suitable for serious traders to use in their daily trading activities. Alright, let's have a quick overview of the features within this toolkit. At the top you can select different modes. The default mode is our Elliott wave cycle. Then the user can select ratio wave cycle, volatility cycle, pivot cycle, periodic wave cycle, retracement cycle, and strength cycle. As you can see, we have many different ways of identifying trends, but the main premise is that it's based on cycles. Once you get the toolkit in front of you, go through each mode and see which ones that fits your trading strategy. All the different modes work in the same manner. They help traders to identifying trends and retracement within trends. So I recommend everyone to play around with the cycles to find the cycle that fits your trading style and strategy. Okay, let's have a look on how the setting panel works. The main thing is that you have to select the cycle you want to use. So if you have selected the wave cycle, you go down to the section where it says Elliott wave cycle, and you can adjust the settings for this particular cycle. And for instance, if you select the volatility cycle, you scroll down in the setting panel, and under the section volatility cycle, you can adjust the settings to this particular cycle. So the setting panel is straightforward. You select the mode at the top and then go down to the section where the cycle is displayed and adjust the settings if needed. We have also included any alert function call, and I will cover this in a separate video. Alright, let's have a look on the Elliott wave cycle, and as I have said, this toolkit is about identifying trends and pullback within those trends. So once the line is red, as in this case, we are in a negative trend. Then we want to look for retracements or pullbacks within this trend, and the pullback is identified when this white line touches this red line. That is a sign of a pullback, and we should go down further. And as you can see, the price comes back up to this red line, boom, and the new pullback is identified, and we can short the market. Once again, when the white line comes up and touches this red line, it's a sign of a pullback within this negative trend, and we can take this short trade. So this is how the indicator works. So we are basically looking for pullbacks when the white line comes and retest this red line. And when we are in a positive trend, the trend line is green, and basically when the trend line is green, we want to look for retracement within this positive trend. So when the white line comes back down and retest this green line, we can enter long at this retracement. If there is a strong trend and the white line comes back down to the midline, to the zero level, and bounces, this can also be a sign of a retracement. So in this case we can enter long, in this case we can enter long, and this is how the Elliott wave cycle works. You have the main trend, the color of the line, and you identify pullbacks when this white line come back and retest this red or green line or this midline. All right, let's have a look on the ratio wave cycle. And I'm sure you understand how this indicator works by now. We basically look for pullbacks within a trend. So once the white line is above this blue line, we are in a positive trend, and once the white line is below this blue line, we are in a negative trend. And we want to look for retracements within this trend. So when the white line comes back down and retest this blue line, that's a sign of a retracement and we can enter long. And we can see over here, the white line comes back down and retest this blue line. It's a sign of a retracement. Boom, up it goes. And over here we can see that the white line comes back up and retest this blue line. Boom, there we go, a retracement. Right there, another retracement. Back it goes. So that is basically the core of the indicator and how it works and how I use it personally. However, as you can see, we have included an upper band and a lower band, and this band can act as an oversold area and as well as an overbought area, which can lead to a pullback or retracement or a short opportunity in this case, or a long opportunity in this case. So you have the possibility to understand when the market is oversold and overbought. Let's go over one of my favorite features, the volatility cycle. And yes, it works similar as the other features. When the volatility line is green, we have a positive long-term volatility cycle, meaning that the trend is bullish, and we want to look for pullbacks when the green line comes back down and retest this midline. So we have several long pullbacks, long opportunities in this case. So we can enter long right there, we can enter long right there, and we can enter long right there. This is the main concepts of how this indicator works. And let's have a look on a short example. We can see that the line is red, indicating negative trend. Once the volatility line comes back up and retests the midline, we have a short trade. Let's have a look on the fantastic pivot cycle, and it works like this. When the candle is above this midline, we are in a positive trend, and then we want to look for pullbacks. So when the candles comes back down and retest this midline, we want to enter long right there at this pullback. That is how the indicator works and how we should use it. Let's look on a short example. We can see that the candlesticks are below this midline, indicating a negative trend. So we want to look for a short trade when the candlesticks comes back up and retest this midline. Right there, we have a nice retracement and down it goes. Price comes back up again and retest this midline, and boom, nice retracement and down it goes. That is one way to use this indicator. All right, let's have a look on our periodic cycle, and it works like this. When the blue line is below the zero line, we are in a negative trend, and when the blue line is above zero, we are in a positive trend. So in a negative trend, we want to look for short opportunities, and we have two right here. When the blue line comes up and retest the midline, we have a short opportunity. We can short the market, and we can see that the blue line comes back up again. And this is another opportunity to short the market, and down it goes. And then the line crosses above zero, indicating that we are now bullish, and we want to look for long positions. So when the blue line comes back down and retest this midline, we have a long opportunity. Right there, we have another long, we have another long, you can see how accurate this indicator can call these nice pullbacks. So that is how I use this indicator. It's pretty straightforward. All right, let's have a look on the retracement cycle, and it works like this. When we have a green histogram, that is a sign that the market previously has been bullish, and this is the first sign or a sign of a pullback or retracement. So when we get this green histogram, it means that this is most likely a pullback within this positive move. So we want to enter long in this area, and up it goes. And over here we have another green histogram indicating that the market has been bullish previously, and now this can be a sign of a pullback and the market should continue up, and we can enter long in this area. And for the short trades, we have a red histogram over here indicating that the market previously has been negative, and when the histogram starts to plot, can be a sign that we should short the market in this area, and down it goes. Another histogram, red histogram, indicating that the market has previously been negative, and this can be a sign of a retracement, and we can enter short in this area, and down it goes. That is how we should use this indicator. If we have a look at this histogram, it's a negative histogram indicating that the market previously has been negative, right? And this can be a sign of a pullback. So in this case, when the market is at this in this area, we expect this to happen, right? Because that is what we expect to happen after such histogram, right? But in this case, the market broke the level and continued up instead. So this was a sign of a trend change. So it's important to use this indicator wisely. We should not take the signals for granted, because this scenario happens every time the trend changes. All right, traders, let's have a look on the last feature, our strength feature. This feature may look a bit complicated at the beginning, and it requires a bit of understanding to use this properly. So play around with it for a while, get a feel of how it works and how you can use it to enhance your trading. But basically, this is what the indicator does. The red line below the zero line represent bullish impulses. So when the lines become white, that is a sign of a bullish strength impulse. And we can see that the red line became white, indicating a strong impulse in the market. It was followed by a negative move. Right? We can see how the market fell from this area. And once again, the line became white right there, indicating a bullish impulse, followed by a negative move, And then the line became white again, indicating a bullish impulse, followed by a negative move. Right? So that is how we should look at the indicator. So the red and white line indicating bullish impulses followed by a negative move. Let's have a look on the upper line, which works like this. So when the green line becomes white, that is a sign of a negative impulse, followed by a positive move, And then the green line turned white again. That is a sign of a negative impulse and followed by a positive move. And up it goes. So when it turns white, that is a sign of a negative impulse. Turns white, negative impulse, turns white, negative impulse. and followed by a positive move. So we basically read the market impulses with this indicator.